You might think that your retirement budget is all set, but then you learn that Medicare Part B has a surcharge that can add hundreds of dollars to your Medicare payment every single month. Medicare Part B already comes with $185 base premium that everyone has to pay. The surcharge is called IRMAA, and it stands for Income-Related Monthly Adjustment Amount. It doesn't matter if you have Medicare Advantage or you chose a supplemental plan, you're still subject to IRMAA. It's basically a tax, and it's based on your modified adjusted gross income from 2 years ago. Weird, but true. I'm Beverly Harzog, and I'm going to show you how IRMAA works so that you can prepare your budget or maybe even avoid it altogether. And did you know that if the Social Security Administration gives you a huge IRMAA premium payment based on what you made 2 years ago, you can actually appeal that? I'm going to show you how to do that. In fact, I'm going to clear up all this stuff for you. In 2025, your modified adjusted gross income for 2023 is what would determine the IRMAA payments. Now, taxes are progressive in nature usually, but IRMAA is like falling off of a cliff. I'm serious. You make 1 penny more than the bracket you're in, and you're suddenly in a higher bracket. There's no phasing in. You can pay hundreds more in Medicare premiums over 1 penny. Okay. So it's really important to understand how this works. And also, this isn't just about earned income. Let's say you downsize and you make a big profit, that's a capital gain. Well, 2 years later, that's going to impact your Medicare payments. So that's something to be aware of, because if you sell your house now in 2025, it's going to impact what you pay for Medicare in 2027. If you're at a situation where you're not quite retired yet and you can plan ahead, that's important to know. Let's take a look at the income brackets, and I'll show you exactly what I mean by falling off a cliff. Here are the brackets for 2025 Medicare Part B, and I also tossed in Part D, which is drug costs, because that is also affected by IRMAA. I am focusing on Part B in this video, but I did want to let you know about D. So I've got single and married filing jointly. Let's look at the first bracket, 0 up to and including $106,000 if you're single. Married filing jointly, 0 up to $212,000. As I mentioned earlier, $185 is the base premium for everyone. Part B IRMAA surcharge is 0 if you are within that first bracket. You have the cost per person, $185. The added annual cost of 1 extra penny of income. And I did that to show you how much it costs you if you have to jump up to another bracket. In that first case, it's 0. Let's see what happens if you make a penny too much. Now you're in the second bracket, and it's $106,001 up to $133,000 for single. For married, it's $212,001, $266,000. Now there's a surcharge of $74. So the cost per person is no longer $185. Now it's $259. And we jump over to the added annual cost. That is going to cost you $888 extra. That is per person. As you can see, the cost of IRMAA increases as your modified adjusted gross income does. That's why it's important to know about this and to try to plan ahead if you want to do some Roth conversions, those kinds of things. Now is a good time to talk to your retirement planner or your wealth advisor to help you navigate this. Let's jump to $200,001 up to just under $500,000 if you're single. Married, $400,000 and a penny up to just under $750,000. Now you're looking at the cost per person is $591.90, and that's an additional cost of 1 cent of income from the previous bracket to $4,882, and this is per person. And at that point, too, Part D IRMAA, you're going to be adding $78.60 to what your premium plan already is. What income counts? Income that's included in your modified adjusted gross income, like wages, self-employment income, capital gains, taxable Social Security benefits, retirement distributions, rental income. And at some point, you're going to have to make required minimum distributions. If possible, don't wait until you get there. I am already working with my financial advisor, my husband and I, because we're trying to come up with a strategy to make that a little less impactful. If you're receiving Social Security benefits, you may already know this, but IRMAA is deducted from your Social Security check. If you're starting Medicare at 65 but not on Social Security yet, you will be billed quarterly and you're expected to pay 3 months at a time. So what if you disagree with the IRMAA surcharge that you've been, slapped with? Well, you could appeal, and sometimes it actually works. You can file a form to request a reduction in IRMAA, and sometimes it works, especially if you've had a life-changing event. And an example of that would be maybe you stopped working 2 years ago. Your IRMAA this year reflects how much you made before you retired. So you can actually appeal that, and it does not hurt to try, okay, because that is a life-changing event. It can be a divorce. It can be selling income rental property. It's Form SSA 44. And I'm going to add a link in the description to make it convenient for you. I want you to check out this video right here. Social Security and work. How much can you earn in 2025? I explained how much you can earn if you collect Social Security and retire early. Thanks so much for watching, and leave a comment if you have any questions at all. I look forward to seeing you in the next episode. Bye for now.